Hello everyone, and welcome to this presentation of strategic stock market trading. Now in today's presentation, I'm going to reveal how by looking at a chart such as this with limited information, just about going about 2 or 3 weeks back of information, you'll be able to spot signals such as this, and these signals will have the potential to hopefully capture gains such as this, as we see in BDX. I'll show you how to do this in just a few moments. I'd like to welcome you once again. My name is Steven Primo. I am the president and founder of Specialist Trading. I see a lot of names here, people who have attended us in our webinars in the past, but for those of you who are new to my presentations, we are first and foremost an educational company. Our sole purpose is simply to educate you as traders so that you will ultimately be able to make your own trading decisions. You see, it's our belief that the reason why estimations of roughly 80% of all traders fail is because you're basically relying on someone or something else to tell you how to trade, to tell you what the perfect market is to trade, to tell you the perfect time frame, to tell you when to buy or sell. Look at your own trading perhaps. See how you make your trading decisions. Do you go to a website to get signals? Do you go to a trade room, a chat room to find out what to trade? Do you watch a supposed trading guru on TV tell you what to do or wait for news to come out? This is the way 99.9% of all traders trade, myself included, and this is why the majority of most traders fail, in my opinion, is because you've taken yourself out of the game. We really don't trust ourselves as traders, so we're basically asking someone else to do it for us. So once you are supplied with the proper information, what we provide you, we feel that you'll be able to make the proper decisions based on your own style, on your own trading persona, and that's the road that will get you to consistency. I know this because I've been trading for nearly 40 years. When I first started trading, my trading suffered tremendously. In fact, I didn't know if I was going to be trading much longer. But I traded starting on the floor of the Pacific Stock Exchange. I was on the floor for a total of 16 years, and 9 of those years I was a specialist. A specialist was a trader who made markets in roughly about 50 stocks. So if you wanted to purchase or sell any of the particular issues that I was a specialist in, you had to come to me and I would make the market for you. I did this during the crash of 1987 and the bull market that followed. So I traded through this entire time. I had a very difficult time at the very beginning, but I was lucky enough to have some mentors who were able to turn my trading around. So I've seen and traded just about every market environment around imaginable. I know what works. I know what doesn't work. If you've been struggling, I know what that's like. I went through that myself. So that's our sole purpose, is simply to teach you so that you will be able to make your own trading decisions. So I'm going to share with you a great method, a couple of methods actually, for strategic stock trading that you'll learn today. But before we begin, as always, we are required to show you this. So please take a moment to view our disclaimer. I'm going to show you a lot of performance results using this technique, but please remember that we can in no way guarantee that any of the results I'm about to share with you will be repeated in the future. And as you are taking a look at our required disclaimer, I would also like to take this time to invite each and every one of you to follow us on Twitter. You may want to copy down our handle right there. It's at SPCLSTTRADG. Each and every day I post different information along the way, such as perhaps little bits of financial wisdom or signals that have been generated by our strategies. So it's lots of ways to find out more about what we do and get more information, although it is rather limited on Twitter. Now, as I stated, we are an educational company, and my role is not to simply force feed you signals. My role is to teach you how to trade. So as you see here, I'm basically teaching you the same things that I've accumulated along the way and things that were able to turn my trading around. Because once again, I suffered my first 2 years, and I didn't know how much longer I was going to be a trader. But the things I am teaching my own students around the world in every state in the United States are the same things I use in my own daily trading. Okay, so as you can see here, my goal is not to force feed you signals. My goal is not to tell you what the perfect time frame or perfect market is. My goal is to teach you how to trade with the specialist edge, the same edge that was able to turn my trading around. Hopefully we'll be able to turn your trading around as well. Now, since this is a classroom, and because we devote everything to educating you, just like a classroom, I love your questions, but please, if you have any questions, let's wait till the very end, just in about 20-25 minutes from now, we'll get to the end of today's presentation, and then we'll reserve the last portion for any questions. So many times, if you just wait for the next slide, your question will be answered. So please, if you happen to join us a little bit later, if you happen to have a question, just wait till the end of the presentation. I promise I'll go through each and every one of them for you. The only question I will answer, and that is this being recorded? Yes, it is. In fact, we've already had someone ask us that over the question and answer box. Yes, we record all of our presentations, so if you have to leave early or if you're having technical difficulties, Pro Trader Strategies, which is my sister site, they will furnish you with a link to this recording, okay? Once again, if you just happen to join us, keep the questions till the very end of today's class. All right, so let's begin. Let's start out right away with technique number 1. All right, this is extremely important, extremely consistent technique, and basically it's one of our most consistent strategies. It's strategy number 4. Now, unlike most webinars where you go and they just basically try to sell you something, I'm going to give you away 2 of the rules to this particular strategy, and they are basically the entry rules. So you'll learn that in just a few seconds. But let me share with you some of the highlights about this strategy, all right? It does not matter how long you've been trading. It doesn't matter if you've been trading for 30 minutes or 30 years, if you're an amateur or if you're a hedge fund trader. Everyone will get the same basic format, all right? Beginners to advanced. It's from there that we then mentor you with this particular strategy so that you can adjust it to fit your needs. Remember, you've got to make your own trading decisions, so we can alter and pick and choose a few things so that we can alter the strategy either to trade it conservatively or aggressively to meet your needs. But everyone in the beginning gets the same basic format. It was designed for traders looking to catch quick momentum moves. I first started using this nearly 40 years ago on the floor of the stock exchange. This is the first strategy my mentors gave me. Now, on the floor, we held positions maybe for 2 or 3 minutes. You know, we were trading in and out in just a matter of moments. And that's the way it was designed. But we teach you in the course on how to hold it if you'd like to trade it for maybe a few minutes, or if you'd like to hold it for 2 or 3 weeks or 2 or 3 months. Now, its intensity level from 1 to 3, if 1 was the most extreme strategy you'd ever traded, where you couldn't basically leave your computer screen to even go to the restroom, and 3 was the most relaxed, where you'd enter an order and walk away, it's a very comfortable 2. It falls right in the middle of those 2 categories. It only uses 1 indicator, all right? That's all it does. It just uses 1 indicator. I'm going to share with you what that is in just a few minutes. The beauty of strategy 4 is that it can be applied to any time frame, any direction, and any market. So even though we're talking about strategic stock trading today with this particular strategy, you can apply it to any market you'd like. Now, an extra perk for members of the strategy number 4 course is that they receive automatic buy and sell indications. We furnish our members with an add-on to their platform, which will generate buy and sell arrows. But remember, this is for educational purposes only so that you know what to look for. All right, say the add-on generates an up arrow and you don't really understand why that happened. That's why it's there. Not for you to just blindly take the signal, because we don't believe in that, remember. We want you to make your own trading decisions. It's for you to check your homework. Our edge at Specialist Trading is not some promise that we promise you all where you're going to be making millions of dollars by the end of the year. We don't believe in that. Our edge is consistency. We just want to give you techniques and methods that have stood the test of time in terms of consistency, meaning that it's a 2-step forward, 1-step back approach. From time to time, you will have small losses. That's okay, as long as you're able to make them back and then get back on track on the upward slope of your equity. That's what we're looking for. We're not promising home runs, although they may happen from time to time. I'm going to show you a number of them today. That's not what we're looking for. All right, where I showed you in that opening screenshot of, I believe, BDX generated up to 20 points. Well, it's up to you if you wanted to go for the home run and try and capture as much as possible. You could have traded that and exited with a 1-point gain, or you could have tried to squeeze as much profits as possible. It's up to you. Remember, your decision. We just teach you all the different techniques so that you can feel comfortable in any decision you make. All right? So here's rule number 1. And this is, once again, we are sharing these rules with you so that you will get a broader understanding of how we trade. Buy signals can only be entered above the 50-period moving average. If you apply this one technique, I've often stated to my students, if I were stranded on a desert island and I could only use one of the methods I've been taught, it would be this, which we call the buy-sell line. You can only buy if your entry or the signals are generated above the 50-period moving average. Now, conversely, if we're going short, well, it falls to reason that we can only sell if we're below the 50. So sell signals can only be entered below the 50. I know this sounds too simple and it's just too basic, But trust me, this simple rule of buying above the 50 and selling below will keep you out of so much trouble because it gets you on the right side of the market automatically. Let me show you here. Here's an example, another example, an ATVI, all right? Now this chart, if you were just looking at it, it would look as if it's just in a rangy market, that nothing's going to happen. It's going sideways. But we ask ourselves, where is price in relation to that? Obviously, price is above. So we're only going to be buyers. We are not even going to consider selling this, even if it goes to the top of that range again. Now, look what happened afterwards. Now, someone who had tried to short this would have had a very difficult time. If you use that simple rule of only being a buyer if price is above the 50 period, you'll really save yourself a lot of heartache over time. Remember, it's not guaranteed that it will work 100%. There are always new students that say, well, Steve, I had a great buy signal below the 50. I didn't take it, and it went straight up. Sure, that will happen from time to time. But remember, we're trying to teach you consistency. We're not trying to teach you home run trading rules that work maybe one of the times, and then out of the 10, the next 9 are failures. Now we can look at this example in KSS, all right? Someone looking at this would say, well, Steve, this looks like it's bottomed out. It's kind of made a double bottom, and now it's starting to rally to the upside. But we ask ourselves, where is price in relation to that 50-period moving average? Price is below. So until price has consecutive closes above the 50-period moving average, we're only going to be a seller. And it would have been a great idea to look for short setups, because look what happened once again. You see how the market is always trying to give us clues as to what it wants to do. Here's the only trouble. We never ever listen to the market. We've always been taught to listen to some trading guru in a chat room, or some guy on TV, or some convoluted indicator, or the institutions, because they're supposed to know much better than we know, okay? Remember, that's because we don't trust ourselves. If you trust yourself by these sound tools, you'll be able to just make your own decisions. And I can't think of anything simpler than just applying the 50-period moving average. It's free. Everyone can use this starting right after I complete in about a half an hour. You can start looking at this, and I can almost guarantee if you go back and look at your 5, 10, 20 trades, especially your losers, you'll see how well this concept comes into play. Most of the time, you'll see your losses were because you were buying below the 50-period moving average and selling above. Remember, this can be any time frame. Now, we're only looking at daily bars now, but it doesn't matter if you're looking at 5-minute charts or monthly charts. The same concept applies. Okay, that was rule number 1. Now, rule number 2. Let's say we are above the 50-period moving average. Well, then we're going to be looking for a bar that closes in the top 25% of its range. Okay, so what does that mean? Let's look at this generic bar chart here. Remember, it does not matter if this is a 5-minute chart or a monthly chart. It makes no difference. Once you see that you are above the 50-period moving average, you want to look at bars and then just kind of visually divide them into 4 separate but equal spaces, okay? Now, if you close in that top 25%, that top quarter, well, guess what? That is, once again, not a sign coming from some trading guru in a trading room, but that's a sign coming from the source. It's coming from the market giving you an indication to buy. What a great edge to have, that the market is speaking to you and telling you most likely what it wants to do. It wants to go higher, okay? Now, a lot of people say, and this is where they get confused, they say, well, Steve, I don't trade open, high, low, close. I always trade candlesticks. Okay, well, how would we know this is an indication to buy? Well, nothing changes. All you're going to do is take the extreme high, the top of the wick, to the bottom of the wick, divide it by 4, and if you close in that top quarter, it's the same thing. So nothing changes because we're looking at candlesticks or range bars. It wouldn't matter. Now, conversely, let's say we see a bar like this. Remember, this can be a tick chart, it can be a weekly bar. It makes no difference. What you want to do is visually kind of divide it up by 4 separate equal parts. And if you close in that bottom quarter, that bottom 25%, the market, the only thing you should be listening to, that for some reason we're trained not to, but the only thing we should be listening to is telling us that's an indication that I'm most likely going to be going lower. So you may want to think about selling, okay? Remember, this is if we are below the 50 period. If we're above the 50, we're not going to be concerned with bars closing in the bottom 25%. We're only concerned with bars closing in the top 25. But since we are now below the 50, we want to look for bars that close in the bottom 25%. Once again, just because you trade candlesticks makes absolutely no difference, all right? Same thing, you take the top, the extreme high, the top of the wick to the bottom of the wick, divide by 4. If you close in that bottom quarter, it's the exact same thing. There's no difference just because you're looking at candles. All right, so let's look at some strategy 4 examples with the 2 rules I just gave you. Now, strategy 4 only has 5 rules altogether. All right, I've just given you 2 of them, almost half of the rules. The other rules are stop placement, a little bit more about entry and the exit. So this is really a real big core of what you know as a strategy number 4 member, but we've given you them for free. And I'll show you how simple it is. Let's look at this older chart of MSI. All right, once again, someone could say, well, Steve, there's no range here. We're basically going sideways. Well, not really, because the overall trend is up. How do we know? Because the majority of price bars are above the 50-period moving average. So we're not going to be a seller at all. We know that we're not going to sell. So that means the overall range must be up until we get consecutive closes below. All right, and what do we have here? We have a bar that closed in the top quarter of its range, okay? Now, even though I can't divulge all of the remaining rules of the strategy, the add-on that comes with membership to this course generated a buy signal, okay? So this would have been our buy setup for MSI, and look what happened. See how simple this is? We don't look at any news. We don't care what the institutions are doing. We don't look at volume. Remember, keep your trading as simple as possible. We've all been taught as traders that the more complicated your trading is, the more valid it will be and more successful. Well, in 40 years, I found the opposite to be true. It's actually the simpler your trading techniques are, your trading methods, maybe 3, 4, or 5 rules, the more valid they are in terms of consistency. And look how simple this is, all right? How about ADSK? Now, someone looking at this will say, well, Steve, this is a clear uptrend. We're making higher highs and higher lows. This is the way I've been taught. And the chat room I go to likes this stock, says that the institutions are really buying this. That's why it keeps going higher and higher. So I'm going to be a buyer of this, okay? This is the way most people trade. You see how all those decisions were made on an outside source, all right? Let's look at the only thing we should be looking at. The source is the chart in front of us. So we add the 50-period moving average. We ask ourselves, where is price in relation to that? Price is below. So if it's below, are we going to be a buyer? Are we going to be listening to the institutions or some guys in some chat room? Absolutely not. We are sellers of this stock. We just have to look for a little structure now. Just because price is below doesn't mean we're going to buy or sell at the market. It means that now we know what side to be on, but we still have a job to do. We have to start looking for structure. This is the beauty of strategy number 4. It gives you that structure. So right here, we see we have a bar closing in the bottom 25%. All right. Without giving away all the rules, the strategy add-on generated a sell signal. All right. Remember, this is just for you to learn with. After a while, after you've gotten some practice, you won't even need this anymore. I can spot a strategy 4 sell signal just by looking at a chart. And look what happened. The stock fell out of bed after that. Now remember I said just a few minutes ago, I said our strategies, our methods are based in consistency. From time to time we will hit home runs, but that's not what we're looking for, because we know it's just as easily, we can lose that much money. I knew tons of traders on the floor that made hundreds of thousands, if not millions of dollars in a relatively short time. And then guess what? None of them are trading today because they've given it all back. So that's not what works in the long run. What works in the long run is a method that's consistent. 2 steps forward, 1 step back. So that means we will have small losses from time to time. In fact, let me show you some of this. Here's an example in Tesla that meets all of the rules. We're below the 50-period moving average, and we have a bar that closes in the bottom 25%. Now, our add-on for the strategy generated a sell signal. So someone right here would say, boy, this is perfect. It's probably going to come down really a lot, and I'm going to make a lot of money, so I'm going to sell it. And look what happened, okay? Remember, nothing is guaranteed to work 100% of the time. Or what about this? Let's say you just became a member and a buy signal is generated. You're all excited. You say, okay, I've studied all the rules. I've paper traded for a while. I really know what to look for, and there's a buy signal, so I'm going to take that. So you buy it, and you get stopped out with a loss. So now you're thinking, boy, I'm not sure if I should have purchased this thing. I don't know if this guy, Steve Primo, is really on the up and up because this stuff isn't working. And now price is below the 50 and you get a sell signal. Then you say, you know what, I'm not going to take this. I'm a little gun shy. I can't afford to take another loss this soon. And so you don't take this one, but this one works perfectly. You would have made back everything you lost and made more. I'm sure that looks familiar to a lot of people. Or how about this? Let's say you jump in, this looks perfect. All right, we're above the 50 period. We've come and sold off a lot. So this is a perfect buy setup. Okay, so you're excited about making new highs in CVX, and look what happens. Okay, so we have to ask ourselves, how can we increase our odds for success? Because remember, we're not going to tell you that every trade's a winner, but we can add a filter that will increase our odds. And what is that? Well, that's technique number 2. That is the PET D. This is where we're really going to ramp up our odds for consistency. This is where we really become a strategic stock market trader. Now, for those of you who haven't seen my presentations before on the PET D, this is something I've been using for nearly 40 years. Okay, it's a proprietary algorithm. We're not giving it away because there is some talk in the future with me and Pro Trader Strategies where we actually may license this. Okay, there's lots of interest in this. So we're keeping it, the formula, in-house. All we can tell you is it's based off momentum. Now, it's a color bar tool. When I was introduced to this nearly 4 decades ago, we had to put this together by hand. In other words, every time we, a bar closed, we had to come up with the calculations, but it was very difficult to apply to intraday trading because by the time you finished the calculation, another bar started and it was too late to do any action on it or based off of it. So at the time, we only applied it for daily bars. But with, now 40 years later, with high-speed computers and programmers, we've been able to change it into a color bar tool. So what it does is it basically is designed as a short-term trend identifier. And I know there's a lot out there, a lot of trend identifiers, but this, in my nearly 4 decades of trading, is the best thing I have ever seen. And it is something I use on a daily basis. The beauty of this is that it will often identify a trend before you see it in progress. So this will have time for you to switch with the trend, the short-term trend, or be able to look for setups within the trend. Let me show you what I mean here. Remember, a series of green bars, since it is a color bar algorithm, just tells you that the short-term trend is up. And a series of red bars tells you that the short-term trend is down. And remember, we're talking about short-term trend here. The 50-period moving average is designed to tell you the overall trend. But if you want to know the short-term, the PET D is the best thing I know of. As we see here in this example of Apple, all right, Apple was going straight up, and it looked like the trend was well established. Let's say you jumped in right around here because, once again, let's say that signal service generated a buy right here, okay? Well, things are going okay for the first week or so, and then look what happens, all right? I'm sure that looks familiar to a lot of people. What if we could have known in advance when the trend was about to take place? Well, that's the beauty of the PET D, because remember, an uptrend is generated with green bars, a downtrend is generated with red bars. So if we add the PET D, we see how beautiful it is, or it's just so simple in front of us that there's really nothing you have to figure out. And with the PET D, we would have known as well back as here. You see those first 3 green bars? We knew that Apple was going to be in an uptrend. We didn't know how high it was going to be because it's not a forecaster of telling you where price is going. It's just telling you the current trend based on the last bar. So as long as the bars are green, we know that we should still be long. And we knew well in advance before Apple fell out of bed that a downtrend had begun. So it would have given you ample time to get out and to stop and reverse. Now, it just doesn't work with stocks. We can apply this to a weekly chart of the IWM. That's ETF on the Russell 2000 index. You see how this was going down and then switched trends and went up? Well, once we apply the PET D, we see how the PET D can help us know in advance before a full-fledged trend has started. Now, that's a weekly chart of the IWM. We can also go to a 10-minute chart of the E-mini futures. All right, you see how this 10-minute chart here, we went straight up, and right when the trend ended, the bar switched to red. Let's try another market here, a monthly chart of the British pound. Okay, we can look at the British pound here was going straight up, and then once the bars changed red, look how it gave us advance warning of the market falling out of bed here. Even when the British pound had a nice bounce up in the middle of 2015, the bars, the outline of the bars continued to be red. That's telling us that even though we're having a bounce, we are still bouncing in a short-term downtrend. So you see, this is the beauty of the PET D. These are all the things it's based off of. But we found through our membership and through trading this after a while that there's also another added bonus by applying the PET D, and this is It's a signal confirmation tool. So not only will it tell you with amazing accuracy what the short-term trend is, it will also identify or I should say confirm a signal. Now, this can be any strategy that you're trading. It could be something from another educator you've purchased. It could be something you've devised. It doesn't matter. We've seen, though, that it works fantastic with our strategies as confirming whether you should take that buy or whether you should take that sell signal. And then once again, increasing our odds for success. So we ask ourselves, if it's a signal confirmation tool, what happens when we combine the PET D with strategy 4? Remember, we just shared with you 2 of the rules to strategy 4. So what happens if we combine those 2? Well, we have here what we call our dynamic duo. Our members have told us that they've increased their consistency rates tremendously by combining these 2 together. They've, for the first time, been able to trade with consistency, knowing that they have a strategy that is very simple and easy to apply, and as well as they have a confirmation tool that gives them the confidence to take the trade. This is our dynamic duo. And this is the way it works. I'm going to share with you exactly how to apply it. If strategy number 4 generates a buy signal, remember we just gave you 2 of the rules for a buy signal, the PET D must color that bar green. All right, so if you get a buy signal, it must be green. Now conversely, if strategy number 4 generates a sell signal, the PET D must color that bar that the sell signal is generated, whether it's a 5-minute bar, a monthly bar, weekly, or daily. It must color that red. Now remember, we do not need all of the bars prior to that to be either green or red. We just need the signal bar to be in sync with the PET D. That's it. So let me show you some examples here. Let's go back to those ones that were losers. Now we had a perfect example here with Tesla. This was a valid signal generated by strategy number 4. But we didn't have the PET D then. So what happens when we applied the PET D? Remember, in order to take the signal, we have to have that bar colored red. When we add the PET D, what color is the bar? It's green. So even though the signal rules have all met their requirements, the PET D is not confirming it. The PET D is saying, I wouldn't take this. There's not a high probability for success here because you're out of sync with the short-term trend. And therefore, you would have bypassed this and missed that loss. Okay? How about that other example here, the 2 examples in Urban, where you took the first one, it was a loss, and you skipped the second one, and that's the one where you had big gains. Well, remember, a buy signal needs to be colored green. So once we add the PET D, we see that, was it in sync with the PET D? Absolutely not. The buy signal was colored red. So you would not have taken that trade, and you would not have had a loss. Now we see another signal comes up later, a sell signal. Is it in sync with the PET D? Yes, it's colored red. So this gives you the confidence to take the trade, and there's the trade you would have taken. So you would have bypassed the losing one and taken the winner. And then lastly, another trade here. Remember, some of the best trades are the ones you never take. That's the beauty of the PET D. A buy signal was generated. In order for us to have the confidence to take it, it needs to be colored green. And we wouldn't have missed all those losses, but let's see what happened. It was colored red. So we would have never have taken this trade and never have suffered all those losses, okay? So you see the beauty of the PET D when we combine it. Now let's look for some more dynamic duo examples so that you understand this process and see how simple it is. Let's look at JEC, all right? We're above the 50-period moving average. We have a bar that closed in the top 25%. In fact, it closed near the high. So this is the market telling us that a buy signal has been generated. All the other rules have been met. But how do we know that we should take this trade? Well, we add the PET D. The PET D must color that bar green. And we see here that it has colored that bar green. And as a fact, most of the bars were colored green. So this will give us the confidence to take the trade. And the stock rose 6 points in 1 week. Now that's how much you had to work with. You could have gotten out trying to squeeze as much as possible, which we tell you how to do that, or you could have said, you know what, I'll take 1 point and I'm out. It's up to you. You're in charge of your own trading. We supply you with the tools, the tips, and techniques you need in order to make your decision. But ultimately, we want you to decide where you're entering, where you're exiting, where you're placing your stop, and we give you all of those tools. How about PRGO? Now, sometimes Signals take a little bit while to flourish, but ultimately they usually kick in. Here was a sell signal in PRGO. It's below the 50, closed in the bottom 25%. But you see here, a week or two afterwards, nothing much has happened. We really haven't gained anything. We realize this is an expensive stock, but you could have easily purchased options on this. Many of our members don't actually trade the stocks. They purchase long calls or long puts or strategies that are designed on options to be in that direction. Now, as we see here, nothing much happened. And then another signal was generated. All right, so we're thinking, boy, should we double up? Should we buy some more puts, or what should we do here? Well, add the pet D. In order for us to have the confidence, those sell signals should be colored red. Once we do, we see that they're both colored red. Remember, it does not matter what the bars were colored prior to it. All that matters is that that setup bar is in sync with the signal, and the stock dropped 40 points in just 3 weeks. Now remember, did we have any idea it was going to drop that far? Absolutely not. Obviously some news came out. But once again, did we know about the news? Did we study the fundamentals of this company? Were we, did we have advanced information, inside information coming from one of the CEOs? Absolutely not. In fact, we don't even tell our students to listen to that stuff. The only thing you should be concerned about is the chart in front of you. It's a lot simpler. And it's a lot easier to figure out than trying to figure out news and events and volume and support and resistance lines and institutional behavior. It's too difficult. Keep it as simple as possible by listening to the market. And the strategy 4 combined with the PET D is a great translator for telling you what the market wants to do. All right, remember we started out the program with BDX. Well, there was a buy signal generated above the 50-period moving average, and the PET D colored it green. So that gave you the confidence to take the trade. Excuse me, it's up to you how many points you wanted to go for. How about HRB? Once again, this is an example of how not to take a trade will oftentimes save you a lot of money. A buy signal was generated by strategy number 4. But once we added the PET D, we see that it was not in sync. The short-term trend was not in sync with the buy signal, so you would not have taken that trade, and it was a good thing you didn't, because the PET D and the market were already telling you it's probably going lower. Now, the beauty of this is that once you get in sync with the PET D and all the requirements of strategy number 4, well, it will generate signals that are most likely consistent and profitable. Letter K, this was just at the beginning of July. We're above the 50 period, but the stock is going sideways. That's okay. Strategy 4 generated a buy signal, and it was also colored green by the PET D. So you had the confidence to go long Kellogg, and it gained 10 points in 2 weeks. Remember, if you missed that first signal, it's okay. If there is a strong enough trend in place, most likely strategy 4 generates another one, giving you a second chance to get in. Now, we can also apply this to other markets. Remember, that's the beauty of strategy 4, is that it does not have to just be stocks. Here's a chart of crude oil. All right, we're above the 50-period moving average. We have 2 buy signals that were generated. Obviously, in hindsight, they both worked out well. But if we had seen those before they, had come to fruition, we could have applied the PET D and seen that they were both in sync with the PET D. Why? Because it colored them both green. How about ETFs? Here's QQQ, all right? While we're above the 50, 3 buy signals were generated. They were all confirmed, and you can see they were all profitable. Once we went below the 50, a sell signal was generated. It was confirmed by the PET D, and it went lower. Now, I want to show you this older example here in the E-mini futures, all right? This is a daily chart of the E-mini futures, and the reason why I'm showing you this is because this is the way most traders trade. I mean, for some reason as traders, we love to be victims. We love to say, oh boy, I have no chance against the big guys. These high-speed computer traders and these institutions, they hold all the cards. There's no way a little guy like me can make money. And see, that's the reason why I think we always like to base our decisions based off someone or something else, because it always gives you an out. If it doesn't work, you can always blame them, because it wasn't you who made the decision. It's always someone or something else. Now, in this example last year, do you remember how the market fell out of bed in August of last year, and how at one point it was down over 1,000 points intraday? Everyone blamed it on news on China and on the high-frequency traders, and on this computer programs and the institutions, and everyone said, boy, there's no way I can make money in a market like this. That's totally untrue. Once you have been supplied with the information and the education to support yourself, to trust yourself, to make your own decisions, you won't be a victim anymore. Because what did we have here? We had a strategy number 4 sell signal generated. Although this is rather advanced because we are oscillating above and below the 50 period, it did meet all the requirements for a sell signal. But even if you didn't want to take it, you had the PET D to confirm it. And once we added the PET D, we see that the PET D colored that bar red. So this was well before any of that news came out about China, well before the market fell out of bed. You could have taken this as a short signal. Even if you didn't want to take it, you could have known that, well, listen, if the future based off the S&P 500 is generating a sell signal, doesn't it stand for the fact that most likely the market will go lower as well? So maybe you would want to use that as caution. Either way you decided to trade this, even if you decided not to, it's your decision. But you would have been in the know, and well in advance of this sell-off, you would have known that the market was going lower because strategy 4 was telling you it's going lower, as well as being confirmed by the PET D. Remember, when you have the tools and information provided to you, that what we do, this is our job, you no longer will be able to play that victim game. It's the first thing I tell my students. You're not a victim anymore. You're making your own decisions. You're responsible for everything, losses and profits as well. Now here's a 5-minute chart of the E-mini. As you can see, 2 buy signals there, and they're all perfectly valid according to the rules. But once we applied the PET D, we see here that, well, you have the confidence to take both of those trades, and that would have generated 10 points in just 3 hours, or $500 per contract. And then here's a 10-minute chart of the E-mini, and this was last June when the market was really falling out of bed. I believe this was on the Brexit news, where the market gapped lower, okay, and then started to bounce a little bit. A lot of people lost money on this day. Why? Because they were trying to pick a bottom. If price is below the 50, are we going to be a buyer? Absolutely not. The only thing we will be doing is selling. So even on a 10-minute time frame, that same concept applies. So this is when the Brexit news came out, and a lot of people thought, well, they'd take advantage of lower prices. But all of our members said, no, we're going to be selling on these little bounces here. So there was a sell signal generated on this 10-minute chart. But let's just say you were a little bit worried about this sell signal. I mean, after all, we did gap down very low. You need a little bit more confidence to take this trade. You simply add the PET D. And as you can see, the PET D colored this red, and as the market went lower, it continued to be generating more and more red bars. And in fact, strategy number 4 generated another sell signal at the end of the day. So if you were so inclined to hold on to your positions, you could have sold some more and held on for the next day. And had you done that, that would have been a very wise decision because the market gapped down and went down even lower. So had you taken the very first signal, that's 70 points in just 24 hours. That's $3,500 per contract. Lastly, let's look at the currency pair markets. Okay, entirely different market, entirely different time frame. Now, this is a weekly chart of the British pound going back to July and August of 2015. All right, this is going back roughly a year. Now, as we can see, we have a sell signal generated, but how did we know we should take that? Well, you add the PET D, and even though every bar prior to that was green, the signal bar was red. That's all we need to know to go short, and look at what happened to the British pound. We do not look at economic news. It's not required at all. We do not try to figure out what's going on in other countries around the world or fundamental news. All we look at is the source, which is the chart in front of us. Now, remember when the news about Brexit came out and the British pound fell out of bed? Well, we knew a year in advance on a weekly time frame to be short, and this is what happened when the news on Brexit came out. So it was no surprise to us looking at the British pound. How about a 15-minute time frame? The same market on a 15-minute time frame. Well, we had 4 buy signals generated, and all you had to do was simply confirm that with the PET D. That's on a 15-minute time frame. We can also go to a monthly time frame. Here's a monthly time frame of the Canadian dollar. A buy signal was generated in July of 2014, about 2 years ago, and look how much you could have gained. That's 3,500 pips, or roughly about $35,000 per contract if you elected to stay in that long. All right, so let's recap. What did we share with you today? We gave you 2 of the rules to one of our most consistent strategies. Strategy number 4. I have been using this in some context for the last 40 years. It's a great strategy, and I've been using it along with our number 2 technique, the PET-D. The best thing I know for identifying the short-term trend. The beauty of it is when you combine these two very consistent methods, you get this synergy that forms our dynamic duo. And this is what all of our members are talking about, or raving about. They said for the first time, they have reached that consistency in their trading. So as we close here, I want you to ask yourself, and ask yourself honestly, do you think any of these edges could have helped your trading this past year? Let's say you're still on the fence and say, well, Steve, I'm not sure about this PET-D and Strategy 4. Okay, let's say you just applied the 50-period moving average. All right, in good faith, that's yours. You can start using that tomorrow, or the bars that close in the top 25% or bottom 25%. Go back and look at your last 10, 20 trades. Do you think those edges could have helped your trading? I can almost answer for you and say, yes, they would have, before you even look at your last trades. Now, I want to tell you about our special we have for all the attendees today. And this is a fantastic special. When I say fantastic, I'm not just blowing smoke. Trust me, this is an amazing deal. We're slashing the price here, thousands of dollars, but it's going to be for one day only. We're going to be offering you strategy number 4 as well as the PET-D. This is our dynamic duo on a fantastic one-day special. This includes instant course access. It comes with all the detailed instruction and videos. We teach you all the entries, exit, and stop rules. So everything all together. So you can be trading conservatively or aggressively. It's up to you. We provide you with signal alerts. We give you 4 PET-D trading techniques on top of this that are entirely different from strategy number 4. Remember, this includes both the add-ons. So we will supply you with the add-on that you can upload to your computer, your program, that will generate the bars either green or red, and that will also generate those up and down indications for strategy 4 signals, okay? And this also comes with mentoring correspondence, so I'll be able to answer any question that you may have. And remember, we've talked a lot about stocks today. One of the beauties of this, we're also throwing in the bonus of signal alerts for you to learn. Remember, it goes against our nature to simply force feed you signals. That's not why we have these email alerts. We're trying to show you what to look for. This is the best way you can learn so that you can check your work and so that you can know that, well, I saw a strategy 4 signal in that as well. As we look here, this was emailed to all of our strategy 4 and dynamic duo members just a couple of weeks ago. On the 3rd of August, just on the close, a buy signal was generated in DVN, okay, as we see here circled in green. And this is what you would have received as a member for entry on the 4th. Now, if you're a more aggressive trader, you could have actually entered on the 3rd. But as we see here, we don't have the 50-period moving average applied, but we are above the 50, and we have a bar that closed in the top 25%, the 2 rules I taught you today. So the add-on generated a buy signal. But let's say you're a little gun shy, you're not too sure about this yet, and you can purchase options if you like, but let's just say you're a little insecure. Well, if you're a member of the dynamic duo course, you can give yourself more confidence by applying the PET-D. So if you get a buy signal such as this one, all you would have to do is apply the PET-D to make sure it's confirmed. And as we can see, yes, it was colored green. So that would give you the confidence to go long DVN, however you decided to do it. You could have had an option strategy, just bought the long calls, perhaps bought the stock. It's up to you. But as you can see here, the stock generated 8 points in 3 weeks by applying the dynamic duo. This is coming into just a couple of days ago, a current chart. See how simple this is, all right? Now, on top of that, you can apply this to any time frame in any market. Let me show you what happened yesterday. Now, yesterday the market really fell out of bed. We had a sudden sell-off in the market. All right, let's say you're an intraday trader trading the E-mini futures. Well, here's a 15-minute chart of the E-minis. As you can see in the lower left-hand corner here, this was on the 24th of August, right here. Now the bars are all red coming into that 15-minute time frame, and they continue to be red. We have one green, and then a sell signal is generated. We close at the very bottom of the range, and it meets all the requirements. We are below the 50 period, so we know we're only going to be a seller. And on top of that, it's confirmed by the PET-D. So this gives you the confidence to take this trade. And as you can see, well, the dynamic duo generated a sell-off of 12 points in 2 hours, okay? So that's $600 per contract. We weren't following any economic conditions. We weren't looking at volume. We were looking at somebody talking in the chat room. We're only looking at the market, the source. Keep things simple. So as you can see, this applies to any market, any time frame. Our dynamic duo special is being dropped tremendously. The price is being slashed, but for 1 day only. All right, we're only going to have this for the next 24 hours. If you purchase these regularly, it would cost you close to $4,000. Guess what? For all the attendees today in attendance, we're dropping the price down to a one-time price of $497 plus $97 per month. This is 1 day only to get both of these great techniques. Now think of it. We are coming to the last part of the year, the last third of the year. If you've been trading since January 2016 and you're nowhere near where you thought you're going to be, it's about time to get your trading back on track. Get back on track so that 2017 isn't a repeat course of what you've just done in 2016. 2017 will be much better. We really want to teach you how to trade with these methods. These are our most popular and most consistent methods when combined together. Remember, if you wanted to get lifetime access to the pet deal loan, that would cost you close to $3,000. So this is for 1 day only, a one-time fee of $497 plus a monthly payment of $97. You will get both of these, including the add-ons, including signal alerts, including all the rules, including 4 more pet D trading techniques, and then correspondence with myself. You'll be able to contact me whenever you'd like through email and ask me questions whenever you'd like, okay? Here's how to take advantage of this great deal. Remember, my sister site is Pro Trader Strategies. They handle all my marketing for my courses. You can email them at trading@protraderstrategies.com to get more information. They have numerous trading consultants manning the phones right now. They're waiting for you to call if you have any questions. You can call them directly at 310-598-6677. Now, if you look at the very bottom there, that is the very lengthy link there to the special deal we have. But that's not a live link. You have to copy and paste that. But Pro Trader Strategies has posted a live link on the chat box. So go to the far right-hand corner of the Go To Webinar column, and you'll see in the chat box, they have a live link for that special $497 deal, okay? And you can simply click that on. It will take you there. But if you have any questions, you can contact Pro Trader Strategies. A lot of people have questions about what are the platforms it can be used on. Remember, you can apply this to MT4, TradeStation, Metastock, NinjaTrader, Sierra Charts, Interactive Brokers, FCXM, and Thinkorswim users can use the live free stock data to run free NinjaTrader chart platform, and we help you set that up. We have a tremendous tech support department, and they help you put everything together. So if you're a Thinkorswim user, all we do is splice the data from that. You don't have to stop looking at Thinkorswim, but we give you a free NinjaTrader platform because Thinkorswim does not allow us to apply our tools on their platform. That's okay. We'll splice the data, use it on a NinjaTrader platform, and we set that up for you, no cost at all. In fact, our tech support does that for you in a matter of moments. So you can be watching that very simply and very easily, okay? I'm going to leave all this information up here. Remember, 24 hours, and then it goes back to roughly $4,000. If you really want to get your trading back on track to end the summer and go into the last months, and remember, characteristically, summers are very difficult because the markets dry up, volatility dries up, most of the markets are just kind of going sideways. As you can see here, a little bit of volatility is starting to make its way back into the markets. If you want to be prepared for that, that's where Strategy 4 and Pet D work tremendously. So you'll be that much ahead of the game by taking advantage of this great deal. But remember, 24 hours only. So the live link is on the chat box. You simply have to scroll up there. You'll see that posted. I'm going to leave this information up here while I open up the question and answer box. And I just want to say thank you all. If you had questions, thank you for holding off on asking any questions. And I'll just open up the link here. If you can just give me a second. Okay, here we are. Let's see, the question is coming from Nanook. Once Strategy 4 generates a buyer sell, do you wait till the bar closes? Well, that's a good question. Without giving away all the rules, Nanook, because that is taught in the class, remember there are a number of ways to enter. Our basic format for entering waits for the bar to close and then you enter on the next bar. That's the standard format. But remember, a lot of our students trade differently. Some of them say, well, you wait for the bar to close and then, I'll buy on the close or I'll place my limit of a little bit lower at a certain point, which we teach you how to do that as well to capture better gains and to have a better risk-reward ratio. All right. We also teach you where to place your stop and different exit points. So that's all included in the course. I just kind of can't go into that in detail because it basically will be giving away a lot of the information that's in the course. Let's see. Do you have to buy the course to get the email alerts? That's a good question. I'm pretty sure you do, but that would probably be something to deal with Pro Trader Strategies, because remember, they handle all of that, JC. So if you're just interested in the email alerts, but remember, if you get the email alerts, you're turning this into a signal service, and that kind of goes against what we are based off of. Remember, because you'll be getting the signals and saying, okay, well, there's signals generating buy here and sell here, but you have no idea what it's based on. Our goal is not just to simply force feed you signals. That's a recipe for disaster. What we want to do is teach you through these email alerts and through our courses so that ultimately you've learned the information and then you just go make your decisions yourself. You don't need us as a crutch anymore. But most students, what they do with different websites and different educators is that they turn them into a crutch. And they say, well, what's he saying I should do now? Or what's this guy say? Or what's this indicator say? Or what's the system telling me to do? You're taking yourself out of the game. Can you imagine a heart surgeon, saying, well, what do I do now? Okay. Or an airline pilot saying, well, now that we're up in the air and I have 250 people in the back, what do I do now? All right. That's no different from trading. But unfortunately, this is the way most traders trade. They get into a trade and they have no idea why. And they say, well, what do I do? Okay. That's because you have not taken the time to educate yourself and learn a proper method that has shown consistency and then trusted yourself to trade it. But we don't trust ourselves as traders. So we're basically saying, I don't know what to do. I'm not good enough to trust my own decision. So I'll let somebody else do that for me. That, in my opinion, is why 80% of all traders fail. Once you put the power back in your hands, you'll get on that road to consistency. And that's what our goal is, okay? People are asking, once again, what platforms the PET-D works on. It works on MT4, TradeStation, Metastock, NinjaTrader, Sierra Charts, Interactive Brokers, FCXM, and remember Thinkorswim, but we simply take the data from Thinkorswim and then give you a free NinjaTrader platform to use with that data. No extra cost and no cost for setting that up. We set that up for you, okay? Let's see. Can you have the indicator on TOs and Ninja? When you say TOs, you mean Thinkorswim. We can't do it on Thinkorswim, if that's what you're saying, but we can do it on NinjaTrader, yes, okay? Sig is saying, great presentation. Well, you're welcome. He's also saying, can we use a 20-period simple moving average? Yes, once again, it goes against our philosophy to tell you you can't use something because then we're telling you how to trade. It's just been my experience that the 50-period moving average works better than any other moving average. But this is the thing about the moving average. It's not a trading strategy or a signal generator. It's just telling you what side of the market to be on. So if price is below, you're going to be a seller. If price is above, you're going to be a buyer. Then you need to add some structure to generate a buy setup. Now with a 20-period moving average, I have found that to work much better in short-term time frames. All right, but if you're trading daily or weekly or even monthly bars, a 20 period is not going to work very well in telling you what side of the market to be on. That would be like using a 200 moving average on a 5-minute chart. I mean, it's not applicable. All right. Now 200 would work well on monthly bars, but it's not going to work that well on a tick chart. So remember, we want to keep things as simple as possible. And the indicator that I have found that works the best for getting you on the right side of the market, that's the only purpose of it, is the 50-period simple moving average, okay? But feel free to experiment. But I've experimented for 50 years, and the 50 beats everything I've seen, okay? You can use this for options, option futures. It absolutely makes no difference what market you're applying this to. So we have a lot of people that use the dynamic duo for binary options. We also have a lot of people that use it for trading commodities, for trading T-bonds, and for also trading crude oil and even sugar and coffee. It doesn't matter. You can also use it on currency pairs, as we just showed you. Let's see, and then like it's saying, how much will you charge to set it up on Thinkorswim? we don't run it on Thinkorswim. First of all, Thinkorswim won't give us the capability to run it on Thinkorswim. It's not like an extra thing we have to do. They don't give us the capability to do that. So we have to have it on NinjaTrader, which works in conjunction with the data with Thinkorswim, okay? It's just they are locking that up for us, Nanak, so that we're not available to have it there. It's not like an extra charge, okay? Thank you very much, Bernard. Bernard, some fine words. Thank you so much. Remember, my only goal is to teach you and to shorten your learning curve. Trust me, it took me a long time to learn all of this and to structure it together. And hopefully what we can do is teach you so that your learning curve won't have to be, 2, 3, 4, 5, 10 years. You'll be able to learn this and hopefully in a short amount of time. It's different for everyone, but you'll be able to get on track to consistency. Now, we have some members who have been inconsistent, who've been losing for years. And then I get emails saying, boy, Steve, after the first couple of weeks, I see what I've been doing wrong. And I've had like 10 winning trades in a row. I haven't had this in my whole life. We have other traders who just started trading and they say, boy, this is really great. I'm glad I started with you, because we hear horror stories of people that have spent thousands, tens of thousands of dollars and nothing has worked. All right. We're offering you a great deal for less than $500 plus $97 a month to get going, okay? Now, if you're asking how long that $97 per month is, remember, contact Pro Trader Strategies. Here's the email in front of you as well as the phone number, and they can fill you in on all that information. They handle all the courses, all the pricing, and any questions you may have, you can email them or call them directly. Remember, they have tons of trading consultants waiting by the phones to answer any question you may have. No obligation necessary. They're just answering questions for you. So call them or email them, and they will get back to you. But if you want to take advantage of this one-day deal, you have to do that within the next 24 hours, okay? Remember, we are getting towards the end of the year. Ask yourself, are you any better off now than you were in January of 2016? I can almost guarantee that most of you are not, okay? Most of you are probably treading water or doing much, much worse. You get ready to throw in the towel. I know, I've been there. So don't worry about it. It doesn't matter how long you've been trading. I knew guys that made tons of money and then blew out everything. So it doesn't matter. All that matters is that you have the techniques, the resources to get you on that road to consistency, and then someone to mentor you. Remember, along with all this information, the course and the Pet D, comes a mentor with 39 years experience. So I've seen and been through just about everything, and I can answer those questions for you. So anything related to trading, trading, how to apply the Pet D, how to apply the strategy, you will have me as your resource center. Anything in terms of price, in terms of tech support, Pro Trader Strategies is there to answer any question you may have, okay? So we have like this double team here that we can take care of you in any question that you may have, either tech support, resources, or education. We're there for you, and we're there with you every step of the way. So as we conclude here, I want to thank you so much. I hope you got something out of this. Remember, we're different from most websites in that even if you decide not to come on board, we try to leave you with some education each and every free webinar. So you can start using the techniques I shared with you today, the 50-period moving average, as well as bars closing in the bottom or top 25%, and see how they work for you. If you notice in the next 24 hours that they really have helped, you may want to take advantage of this great deal because it goes back up to $3,000, $4,000, possibly even $5,000 in the next few months, okay? Thank you so much once again for joining us today. I hope you got something out of it. I wish you the best of luck trading. I look forward to all of you becoming students and members of mine at Specialist Trading, and especially in our Dynamic Duo course. Thank you so much. We'll see you next time. Bye-bye.